Welcome to PNK Stocks YouTube channel. Let us see today three candlesticks formation and how we can use them. Prior to that, I made some playlist in my YouTube on candlestick pattern, and as we are going today on three candlestick pattern, if you didn't go through earlier the single candlestick pattern, this is the one. Go through that, and this is the single candlestick pattern and live examples on the live chart, and this one is the two candlestick pattern video, and the latest one was the two candlestick pattern with chart examples. Go through this, and this playlist will help you. The fundamental knowledge is more important before working on strategy, so this all will help you in great extent if you go through one by one. And if you are new to the my channel, then all these videos will help you. Please go through them one by one and come back to this. And for a single candlestick formation and example, two candlestick formation and examples, I'll be putting them in the I button in this as well. So let us go through that before and come back here. My suggestion would be, if you are new to the stock market, then these things you should familiar and you should see them in a naked eye and find out which candlestick pattern is that. If you are hands on with that, then it's easy for you to entry into the trade, putting a right stop loss and taking some target prediction, and then getting exited with a good profit. Otherwise there will be a lot of challenge in the stock market. That is the reason, instead of giving quality strategies, I am working on fundamental knowledge, which is more important, because we are all struggled without having that. We started trading and we faced a lot of challenges. That is the reason, if you can put an effort and understand all this, then it will be very helpful. Let us start now today. Three candlestick pattern. Three candlestick pattern. First one is the morning star candlestick pattern. Morning star candlestick pattern is a reverse candlestick pattern which will form most of the time at the resistance. Candlestick pattern, this three candlestick pattern. First one is the bearish candle, this one. Second one will be either green body or red body, doesn't matter, but this candle should be gone below and come back in a great extent, and consolidation happens. Next candle will be a bullish candle, which should be closed above to the first candle high here, this high, and most of the time if didn't close above to the first candle also will find. Lot of examples are given without breaking the first candle high. That also will help entering into the trade, but my suggestion would be, if you get this kind of a trade, entering above, if this candle closes above to this, then there will be lot of bullish trend, and you will be having risk reward, high risk reward. This is again the same morning star pattern, but only difference is the body of the second candle. If it is green or red, doesn't matter. Some of the basic rules. Know how to enter the trade. This is the bearish candle, next one bearish or bullish but consolidation. The next candle should be high bullish candle, which should be closed above to this. Then we'll be entering the trade. So entering the trade, now you need to, when you see this candle is forming, this third candle is forming, you can put your enter somewhere here. At least this candle above 1 or 2 points, you can put the enter, and then put the stop loss here. Let this bullish candle come and hit our entry. Once the entry is happened, when this stock moves above, then bring your stop loss from here to here. Like this, you need to trail the stop loss. Otherwise, sometimes what will happen, market will turn down and it will hit your SL. So my suggestion, bring your stop loss from here to here when there is another bullish candle forms, and if market further goes up, then immediately bring your SL to at your cost price, and then let the market go 1:2 or 1:3 whatever till it reaches to the resistance. This is good practice. This is the example, how we need to work out. In this example, the third candle not closed above to the first candle high, but still this will work, I already told you. So now if you understand on the single candlestick pattern, this is formed as a doji. So what we studied in the doji thing, when doji candle top, if market comes up, then we can still enter. So that is the aggressive investors or traders will do that, but my suggestion, at least you place your order somewhere here once this candle closes, and then place the somewhere here, let the market go up. This is the evening star. This is again reversible candlestick formation. This is a bearish candlestick formation. This will happen at the resistance. There will be high probability that market will come down and you can make money. Now one more important thing, that apart from the candlestick formation, if you can see that initial trend, when we are entering into the market, then we need to see the trend, and then after that the candlestick formation also moving towards our trend, then we can enter. And then when you can see even volume, if we are entering into the bullish pattern entries, then volume should be high positive volume. When we are entering into the negative candlestick formation like this, bearish candlestick formation, then the volume should be negative, and in this especially the trend also should be coming down. The evening star candlestick pattern, first candle will be bullish, second candle also, whether it could be bullish or bearish doesn't matter, but only thing, lot of consolidation should happen, and the wick on the top should be big, so that market gone up, but sellers come into the picture and sold. So there is a buyers and sellers are fighting here, and consolidation happened. When next candle is a bearish candle, big one, and closing below to this first candle, then there is a high probability of market going down. So here now what you need to do, place the entry here before this candle forms itself. Place the entry here and wait. If this candle breaks our entry, then put your stop loss on top of second candle. Let the market come down. When market moved below, bring your stop loss to here. Like that you can trail your stop loss till you get the good profit. The exit point should be, you need to find out the support somewhere below, and place the target there itself and wait. Let the market come down and hit your target as well. So support and resistance also most important here, and these candles forms bullish candle at the support and bearish candle at the resistance. Then again you need to wait till that reaches further. If bullish candle, then it should reach till the resistance level to exit, and the bearish candle forms at the resistance, so it should come back to the support to exit. This is the example of the evening star candlestick pattern. Market moved up, there is a big bullish candle, and there is a doji formed. This is the evening star candlestick second candle formation. It could be anything, reverse hammer or doji, anything will work, but only thing, top side should be a wick. And when the third bearish candle breaks the first candle low, then enter the market, and you can trail till, and this could be the support point where you can exit. Please do like and subscribe my YouTube channel. A lot of people are watching my videos, but I'm just asking you to subscribe and like my videos, wherein people have come back and said that your quality of voice is not good. Then I brought the mic, and I am putting a lot of effort my side, but I'm not asking anything. I'm just asking you people to at least subscribe and like my YouTube channel and my videos, so that I can bring the good content. Let us get into the next one. Next three candlestick pattern is the three white soldiers. These are all fancy names given by Japanese people. Only thing, three white soldiers or three green soldiers doesn't matter. Only three bullish candle happened on one top of it. At least this bullish candlestick pattern formed, and next candle again a bullish candle closed above to the first candle high, and second candle after formation, third candle starts somewhere here, and it again closes above to the second candle high. If this candlestick pattern happens, then this is called three white soldiers. If you don't remember the titles of this candlestick pattern, at least you remember the candlestick formation. That will be well and good. So this bullish candlestick formation forms at the support. There is a high probability of market going up. So now you need to place the stop loss here, you need to place the entry here, and you need to wait you need to, once the third candle forms, then only you need to place the entry on top of the wick somewhere here, and wait, let the fourth candle come and hit your entry level, and put your SL below to the three candle low. This is in the three candlestick formation, the SL is very big. So my immediate suggestion, when fourth candle forms and moves up, then bring your SL from third candle to second candle low. Like that, if market further goes up to the third candle low and even further moves up, then bring to the your cost price. Let us market run from there, and you can wait till 1:2 to 1:5, even 10. This is the write-up of how three candlestick formation forms, when to enter, when to exit, what could be the stop loss, where we need to place, and where we can put the target. We just discussed. This is the exact write-up of how the three candlestick formation. You can pause the video and you can read completely this one, so that you can your mind will record this, and when you see this bullish candlestick pattern, three white soldiers, then you can remember this. This is the example of three white soldiers. Now if you see this, you can enter at the morning star candle itself, rather than waiting this three candles big. Can you observe here? There is a bearish candle, second candle doji kind of a thing, there is a bullish candle. This is itself a morning star candle, and you can enter here. When three white soldiers candlestick formation, by then itself you will be having 1:2 kind of a risk reward. So now some of the candlestick formations they given, but those things may be little complicated, and there will be a big stop loss, but you can enter here. Sometimes what happen, when you trace the candlestick formation itself, by then market mode, then it's three white soldiers candlestick form, still you can enter here, put a SL, and you can trail your stop loss. Three black crows, again this is the reversal candlestick, whatever we discussed on the three white soldiers. Here again three black candles or red candles will form one after another, and the first candle low breaks the second candle and close below to that, and when third candle forms, it breaks to the second candle's low, and it will move further behind. So now when you see this kind of a candlestick formation, put an entry here, let the fourth candle come and hit your entry, and put your SL somewhere here, let market move down, then bring your SL somewhere here, and one more candle forms bearish one, then put here again. If market move further down, then put your SL onto the cost, and you can trail your SL till the price reaches to the support and your target met. This is again write up of three black crows. Again, whatever we discussed on the entry, exit, stop loss, these are all will work. One more thing, the candlestick formation forms, then that should equal to the trend, whatever that moving ahead. Now let us think that you are working on the daily chart. if this candlestick formation happened, then on the weekly chart you need to see the trend is down or not. If trend is down on the weekly chart, if this bearish candlestick formation happened, then you can enter. And you can also see the volume. There should be heavy negative volume, then almost your trade will be in your way and you will be having a profit. Again, this is the example when market moved up and there is a bearish candlestick formation. After that there is another bearish candlestick formation which closed below to the first candle, another third one which closed below to the second candle. We need to enter here, put an SL here, let us market go down. Now you observe here there is a evening candlestick pattern here. Now if you understand evening candlestick pattern in your observing the chart, you can enter here itself rather than waiting 3 crores happen and then you can enter here. So now if you familiar with the candlestick pattern, single candlestick, double or triple, if your eyes are catching on the candlestick pattern in your naked eye when you work on candlestick formation on the charts, then it's easy for you. So my suggestion, go back and open at least Nifty 50 stocks, each stock chart for 1 year, and work and observe how many candlestick patterns that you are observing and those are correct. So my suggestion, now go to video 1 single candlestick pattern and go to the charts, find out whether you can tracing them right or wrong. Similarly, second candlestick formation video, go to the charts, check. This is the third candlestick video formation, candlestick formation video. After going through this, go to the charts and work out. So now we completed 3 candlestick chart patterns. Now the next video we'll be working on chart examples of all the candlestick pattern whatever we worked, so that if somebody missed out on single candlestick, double candlestick, they'll be even having a complete thing in our next video. So please like and subscribe my video. I'll be getting that video on next Thursday. Thank you and have a nice day. Bye bye.